Nvidia, the undisputed king of AI chips, has announced a significant shift in China's strategy, coupled with the launch of a groundbreaking new chip, the RTX Pro. This is not just a business decision, it's a geopolitical pivot that demands our meticulous attention. For months, even years, the semiconductor industry has been caught in the crossfire of escalating US-China tech tensions. Export controls, particularly on advanced AI chips, have been a central pillar of Washington's strategy to curb China's technological ambitions, citing national security concerns. Nvidia, with its near monopoly on high-performance AI GPUs, has been at the epicenter of these restrictions. Now we are seeing a significant reversal. Nvidia has confirmed it will resume sales of its H20 AI chips to China, a chip specifically designed to comply with previous US export regulations. This news comes on the heels of intensive lobbying efforts by Nvidia CEO Jensen Huang, including direct meetings with President Donald Trump and US policymakers in Washington and subsequently with senior officials in Beijing. Why is this happening now? The consensus points to a strategic negotiation and a shift in the Trump administration's approach. This resumption of sales is tied to a broader US-China trade deal, specifically concerning rare earths magnets. It's a clear indication that the US government is now viewing its tech export policy through a more pragmatic lens, recognizing the mutual benefits of a degree of technological exchange, especially when linked to critical supply chain diplomacy. Nvidia has stated that the US government has assured them that licenses will be granted for H20 shipments and deliveries are expected to begin soon. This is a massive win for Nvidia, which had previously taken a significant financial hit, estimating a $5.5 billion charge due to the prior restrictions on H20 sales. The Chinese market is vast and highly innovative, with half of the world's AI researchers residing there. Nvidia's re-entry allows them to tap into this immense demand, with major Chinese tech giants like ByteDance and Tencent already scrambling to reserve these GPUs. How does this impact the US market and stocks? Now, immediately following the announcement, Nvidia's shares surged. This isn't surprising. Access to the world's second largest AI market unlocks a significant revenue stream. Investors who had priced in a near-zero sales outlook for high-end chips in China are now celebrating this newfound opportunity. This move reaffirms Nvidia's dominant position in the AI chip landscape and strengthens investor confidence in its long-term growth trajectory. It's a clear signal that the company can navigate complex geopolitical landscapes. Nvidia has already made history as the first public company to reach a $4 trillion market capitalization, and this news only solidifies its upward momentum. The positive sentiment extends beyond Nvidia. Rival chipmaker Advanced Micro Devices (AMD) also saw its shares jump as it too announced plans to resume shipments of its MI308 AI chips to China. This suggests a broader easing of restrictions or a more flexible approach from the US government, which benefits the entire semiconductor sector. Companies like Supermicro Computer, which are key partners in building AI infrastructure, are also seeing a boost. This development is a strong signal for a subtle yet significant shift in US-China tech relations. It indicates a move away from outright decoupling towards a more managed, competitive interdependence. For the broader US market, this reduces a major geopolitical overhang that has cast a shadow over the tech sector. Reduced trade tensions can foster greater capital flow and technological exchange, potentially boosting overall economic growth and investor confidence in global trade. The Nasdaq, heavily weighted with tech stocks, is particularly sensitive to such news and is likely to see sustained upward momentum. While some may argue that allowing advanced chip sales to China would empower Chinese competitors, the counter-argument, championed by Jensen Huang, is that maintaining a presence in the Chinese market allows US companies to set global AI standards and influence the direction of worldwide AI development. Now, Nvidia's CUDA platform remains a crucial differentiator, even for Chinese firms, effectively creating rather a moat that is difficult to replicate. This fosters a competitive environment where US innovation remains at the forefront. However, we must consider the potential bear cases and ongoing risks. While assurances have been given, the export approval process is still pending. Renewed scrutiny from US legislators, particularly around national security concerns and dealings with entities on export control lists, could still create obstacles. Political risk remains high, and any shift in Washington's stance or new diplomatic flare-ups could disrupt licensing. The initial export restrictions spurred significant investment and innovation in China's domestic chip industry, with companies like Huawei making strides. While Nvidia's chips and software ecosystem remains superior for now, continued access to advanced US technology could accelerate Chinese advancements, intensifying long-term competitive pressure. Linking AI chip sales to rare earth steels may set a precedent for deal-by-deal approvals, adding complexity and unpredictability to US tech companies' China operations and strategic planning. Alongside the strategic shift in China sales, Nvidia also unveiled a new chip specifically tailored for the Chinese market, the RTX Pro. This is a crucial piece of Nvidia's adaptive go-to-market strategy in a complex geopolitical landscape. The RTX Pro is described by Nvidia as fully compliant with US export regulations. It's a new GPU designed specifically for China, intended for digital twin AI applications in sectors such as smart factories and logistics. While details on its precise specifications are still emerging, it's understood to be less powerful version than Nvidia's top-tier chips, but still highly capable for a range of industrial AI applications. It's likely optimized to fall below the performance thresholds that would trigger strict export controls, while still offering significant AI processing capabilities. The RTX Pro demonstrates Nvidia's ability to innovate and adapt to diverse market demands and regulatory environments. By developing a China-compliant chip, Nvidia can maintain a strong foothold in a crucial market without running afoul of US export rules. This strategy allows them to capture revenue that would otherwise be lost and mitigates the risk of being completely shut out of the market. The focus on digital twin AI for smart factories and logistics highlights a growing area of industrial AI. This isn't just about large language models and generative AI, it's about optimizing industrial processes, enhancing efficiency, and driving automation. The RTX Pro signifies Nvidia's commitment to supporting this expanding segment of the AI market globally, not just in China. Even with slightly downgraded capabilities, the RTX Pro, combined with Nvidia's pervasive CUDA software platform, ensures that Chinese industries continue to rely on Nvidia's ecosystem. This maintains Nvidia's influence over the direction of AI development and adoption in a critical region. The introduction of the RTX Pro in conjunction with the H20 sales resumption provides Nvidia with a more stable and diversified revenue stream from the Chinese market. This cushions the impact of any future potential restrictions on its most advanced chips and demonstrates a resilient business model. While the RTX Pro is designed for compliance, it still offers advanced capabilities that will be attractive to Chinese companies. This puts pressure on domestic Chinese chip makers like Huawei to continue innovating to keep pace, fostering a dynamic and competitive environment in the AI chip sector. Stepping back, it's crucial to understand the monumental economic impact of AI chip technology as a whole. AI is no longer a futuristic concept. It's a fundamental resource akin to energy or the internet. The chips that power AI are the bedrock of this new industrial revolution. Studies by leading consulting firms like Accenture and PwC estimate that AI could double annual global economic growth rates and add trillions to global GDP by 2030. This growth is driven by massive increases in labor productivity through automation, improved decision-making through data analysis, and the creation of entirely new products, services, and industries. AI chips are the engines of this productivity surge. The nation that leads in the AI chip development and deployment will likely lead the global economy. For the US, Nvidia's dominance is a critical component of its national economic and technological security. Allowing Nvidia to compete effectively in major markets like China ensures that US innovation continues to set the pace. The feverish demand for AI chips has led to unprecedented investment in data centers and AI infrastructure globally. This translates into massive capital flows, not just chip makers, but also into cloud providers, software developers, and a myriad of industries leveraging AI. This creates jobs, fuels R&D, and drives economic activity. From healthcare to finance, manufacturing to logistics, AI is transforming every sector. The availability of powerful and specialized AI chips like Nvidia's H20 and the new RTX Pro facilitates this transformation, enabling companies to implement AI solutions that were previously impossible or cost prohibitive. The global semiconductor market is projected to continue its strong expansion. Following a robust rebound in 2024, the World Semiconductor Trade Statistics, or WSTS, predicts an 11.2% growth in 2025, reaching a total value of over $700 billion. AI chips are a primary driver of this growth, and Nvidia's strategic moves positions it to capture an even larger share of this expanding market. Jensen Huang's visit to Beijing was more than just a courtesy call. It was a carefully orchestrated diplomatic and business maneuver. His statements emphasized China's role as a massive, dynamic, and highly innovative AI market, and the need for American firms to maintain a foothold amidst growing competition from domestic chip producers like Huawei. Huang's meetings with both US and Chinese officials underscored the critical importance of a stable working relationship for the global tech industry. His ability to bridge the divide, advocating for open source research and the benefits of American technology, played a significant role in the recent policy reversal. By publicly acknowledging the importance of the Chinese market, Huang reassured Chinese customers and partners of Nvidia's commitment, even in the face of geopolitical headwinds. This helps rebuild trust and facilitate future collaborations. Huang's dual visits to Washington and Beijing highlight Nvidia's delicate balancing act, positioning itself as essential to US AI leadership while simultaneously seeking to maintain access to China's lucrative market. This is a model that other US tech companies will undoubtedly be watching closely. Huang's vision that every civil model should run best on the US technology stack suggests a long-term strategy to ensure American influence over global AI development, even seen as China rapidly advances its own capabilities. It's about leading through technological excellence and ecosystem dominance rather than through isolation. This development, coupled with AMD's similar announcements, could signal a partial de-escalation of the US-China tech war, at least in certain segments. While tensions will likely persist, it suggests a more nuanced approach is emerging, recognizing the economic realities and interdependence of the global supply chain. The linking of chip sales to rare earths trade deals could set a precedent for future US-China negotiations, where technology exports are used as leverage in broader economic and strategic discussions. For the global economy, this move potentially reduces some of the risks associated with a fragmented and decoupled tech supply chain. A more integrated, albeit competitive environment can foster greater efficiency and innovation. In summary, Nvidia's decision to resume H20 sales to China, catalyzed by Jensen Huang's strategic diplomacy and the launch of the RTX Pro, marks a pivotal moment in the ongoing narrative of AI, trade, and geopolitics. For the US market and stocks, this is overwhelmingly positive news. It injects renewed confidence into the semiconductor sector, boosts Nvidia's already soaring valuation, and signals a potentially more pragmatic approach to US-China tech relations. Investors can expect continued strong performance from AI-related stocks as the market re-rates the opportunities in a less restrictive trade environment. Globally, it underscores the indispensable role of AI chips in driving economic growth and technological advancement. It also highlights the intricate dance between national security interests, commercial imperatives, and the realities of a deeply interconnected global economy. While challenges and risks remain, this development suggests that a complete decoupling of the US and Chinese tech ecosystems may not be the most viable or beneficial path forward. Instead, we are entering an era of managed competition and selective engagement where strategic negotiation and adaptive innovation will define success. The future of AI is not just about groundbreaking technology, it's about the complex interplay of international relations, market dynamics, and the vision of industry leaders like Jensen Huang. The ripples from today's announcements will be felt across every sector, from Wall Street to Silicon Valley and far beyond. And that concludes our special report on Nvidia's latest strategic moves. Join us next time for more in-depth analysis on the ever-evolving landscape of crypto, AI, and blockchain.